Hey everybody, my name's Allison Ostrander and I am the Director of Risk Tolerance as well as an options specialist here at Simpler Trading. And in today's video, I am going to talk about a strategy that I have been using this year in the Profit Recycling Mastery. It has been an excellent one to use this year given the volatility, and I think it's going to be a great setup for this week given some of the news that we have coming out tomorrow and later on. So the strategy that I'm talking about is the compound butterfly strategy. This is a class I taught here at Simpler, and in particular, out of this strategy, we're going to be focusing on one part of it. And it is a great way to use a combination of different butterflies to take advantage of the market environment you might be in. And because this market environment has been really volatile, right? We've had huge moves to the downside. We've had huge bumps to the upside, whether it's on a singular day or whether it's been a nice run higher. But we've seen overall a lot of volatility, right? We have that uncertainty creeping in with the Fed situation and rate hikes and everything that Powell just said. And of course, we have, the CPI and all the other data coming out later this week and this month that could affect those rates. And so the market, of course, has been really focused on that this year on top of other things. And therefore, it's been a very volatile year. So one way to take advantage of the volatility is by using the compound butterfly strategy, in particular, using two broken wing debit butterflies, one on the call side and one on the put side. It is a great way to take advantage of the volatility without necessarily having to be correct on the direction of the move, right? Because there's only one thing that we can be certain of is how much capital risk that we put out there. And I myself like to put as small a capital risk as I can to either get a good probability of a profit or a very nice risk versus reward or a combination of both, right? And in this market this year, with that potential of a strong pop up, with the potential of a strong pop down off news, or the potential of volatility in both directions, whether it happens on the same day or whether it happens, across 2 days. We've certainly seen that this year. And there have been times where I thought the reaction off of Fed news and things like that would for sure be a bounce down, and it ended up doing stuff like this where it was a bounce up, right? Or vice versa. Maybe you're one who thought it was for sure going to be a bounce up, and then it ends up being a reversal back to the downside. So this is a great strategy that I've been using this year, and I think it's a good one to take advantage of this week, especially if we do get one of those moves where it allows for both a pop up and a pop down later on. So to take advantage of this strategy, like I mentioned, it is a broken wing butterfly on both sides of the market, right? The call side and the put side. That way, if it's a volatile bounce up off of the news that happens later this week, and maybe a continuation into Friday, then you have something set up on the call side. Vice versa, if it's a volatile move down, we'll look at something on the put side. The idea behind this trade, though, is that our net debit between both butterflies is not only less than the max profit potential, obviously, but it still allows for a profit if the butterfly goes completely in the money. Now, you might be asking me, Allison, I thought butterflies couldn't be profitable if they went completely in the money. And you are correct when it comes to a standard butterfly, where the spread width, right, is the same length. But with a broken wing butterfly, we are looking at it where the debit spread is technically wider than the credit spread. That's a part of this strategy, and that's where the forgiveness factor comes in on if it's a very volatile move, right? Maybe not only is it a move up towards your pin strike, but it goes completely past that. So you had the direction correct, but you might have chosen the wrong pin strike. Well, the debit broken wing butterfly will still allow for that profit potential. So let's walk through the trade idea. Now, this is based off where the market is currently trading at open, right? I usually prefer to put these on more into the close myself, so keep that in mind. You might be looking at different strike placements if we're trading a lot higher or a lot lower. But currently right now, I certainly don't think that this is a bad spot for the call spread. As you can see, 4,200 is a great psychological level. There's a lot of open interest here, and it's a 15-10 spread width, meaning if it goes completely in the money, this spread will settle for $5 because it's the difference in spread width. 15 minus 10 equals 5. So if it goes completely in the money, it will still be worth $5. 5, of course, minus $1.50 is a $3.50 profit potential, right? Not a bad risk versus reward. The reason why I like these strikes is we do have some resistance coming up above us, right? We're running into it right now this morning. The 30-period simple, which is at 41.20, range. The ATR trailing stop, which is around 41.58. However, of course, if that news ends up having a positive market reaction, right, and the market reacts in an emotional way to the upside, then 4,200 is certainly not that far away to break these levels. There's also a gap fill up here that we could fill at 42.1870. Right? So that would also not be a bad place to consider a target. So by doing the 4,200 strike, it of course hangs out by that psychological level. But if it went up to 42.18 or maybe even higher, then of course the broken wing butterfly would still allow for the profit potential on top of that. So that's about $1.55 as of right now. Let's look at the put side though, right? What if the market reacts negatively to the news this week and drops back down? Well, certainly we have a strong cluster here of support anywhere between 40.27 to 39.93. So right around that 4,000 range doesn't seem like a place that would be out of the question. Maybe we even move it a little bit above that level, right? Closer to the 30-period, the 100-period simple as support around that 40.20, 40.30 range. And let's, of course, keep it the same spread width. So 15 points here, 10 points here. So the pin's slightly above 4,000 in this case, but it's closer to that 100-period simple. So of course, if you test that range and then stall, it could still allow for a profit. And you can see here right now the cost basis on this is about $1.20. Let's say it's a little higher, $1.30, right, that we end up paying. Well, the other spread was about $1.55. Let's round that up to $1.60, right? So the idea is that on both trades, both butterflies, right, they're both 15 10-point debit broken wing butterflies. On the first spread, it was $1.55. Here we're rounding up and saying we paid $1.30. So in total, we pay about $2.85 for both butterflies. Well, let's just put this in at $2.85. As you can see, the max profit potential, meaning if we go and hit one of our pins at expiration, and we let it cash settle there, well, our max profit potential is 12.15. 12.15 easily covers the risk on both butterflies and allows for an overall profit. Let's say it, though, goes completely in the money on one side. Let's say we just all of a sudden drop off this news and we start selling hard to the downside, right? Usually when things sell, they can tend to sell quickly and sell a lot, right? That's why what we've certainly seen this year. So let's say that happens and we go completely in the money and we're like at 39.50, right? It's like deep in the money. Well, we know that the spread would still be worth $5, this broken wing butterfly. 5 minus the 285 cost basis would still allow for a 215 profit potential. Not quite the 100% return I usually like, but still not a bad risk versus reward. And the benefit of this strategy, right, of having one both on the call and put side, is there have been times where you can take profits on actually both butterflies. In the mastery, for example, just the other week back here, we had on this very strategy, right, a call and put broken wing butterfly for later in the week. At the open on Friday, there was the possibility to take a profit on the call side, and that profit would have covered the risk on the put side and still allow for a small net overall, right? So it still would have allowed for an overall small profit. It would have covered the risk on both sides. And I know some people who are able to take advantage of that in the mastery and closed out of it. Then going into the close, we dropped enough to where all of a sudden we were very nicely in the money on our put butterfly. And then, right, we closed the put butterfly out. If you missed closing the call butterfly out, the put butterfly still covered the risk on that side and allowed for an overall, very nice profit overall. If you were able to catch the profit on the call side, and then again on the put side, it was an excellent profit, right? So it's a really great strategy to play in this volatility. And by setting it up for Friday, we could take advantage of a move like this, right? Where maybe it goes up on the data and then the following day's reaction is negative back down. If it just goes straight up or straight down, then we still have a possibility of at least a profit on one side. So like I said, this has been a really great strategy this year. It's certainly one I would check out. And as long as the volatility, whether, either direction, as long as it remains in the market, this is a good one to consider implementing, especially if you think that there's going to be a bigger catalyst like news coming out that we have this week. So I hope this gives you a trade idea for later in the week. As always, may the trade be with you, my fellow Jedis, and I look forward to talking to y'all next time.